The numbers were a little bit slower than expected. If you exclude last year, the growth rate goes all the way back to 1990. So while it's slow, it's by design. So most of this slowdown is in fact policy driven. Beijing is prioritizing long-term structural change over short-term growth, and they have their GDP targets for 2021 and 2022 much lower than Wall Street consensus. So 10 banks have taken down GDP targets for this year from 8.5% on average to 8.3%, but Beijing has only been shooting for 6% because they anticipated that the long-term policy changes would have this impact on the economy. So they started tightening policy earlier this year, which was much sooner than expected. The global pandemic raged on, so they might have to reverse some of that policy, which we saw in July. They lowered the reserve requirement ratio by 50 basis points. We think it's possible that they'll have to do another 50 basis points in the next month or two to keep things going. But by and large, things are going according to their design. Fixed asset investment was also down 7.3% versus 7.9% estimated. And industrial production came in lower at plus 3.1% versus plus 4.5%. The shining light in all of this data, though, is one of the initiatives they had is to increase domestic consumption. And we saw that in spades. Retail sales beat estimates, 4.4% versus 3.3%. Wow. So the policy initiatives, while they are impacting industrial production, while they are impacting GDP in a negative way, they are so far starting to get the desired outcome of Beijing.
Thomas, let me talk to you about the hiccups, because we see a lot of them here in the United States, lots of articles about the great resignation, all these kids quitting jobs, difficulty finding bodies for some of these jobs, supply chain issues, bottlenecks at the port. What are some of the issues that China is staring at that can kind of stand in the way in their economic recovery? I mean, we had the story about building materials. That's also an issue that we've seen here with people trying to get home improvement jobs done and lumber costs going up. What do you see as some of the roadblocks out there for the economic recovery?
Well, energy shortage has been a problem, so they've turned up some kind of old coal production facilities that will help them in the short term. The demand of the recovery from the developed world has been much larger than expected. If you measure by container ships through 2021, we're at a record level. So it's been hard to kind of catch up with that. But I think the biggest risk actually, real estate is 25% of China's GDP. That's much larger than the developed world. They've taken a concerted effort to slow that down and direct investment into more productive things like manufacturing, like high-tech manufacturing, like semiconductors, research and development. But if they overshoot too quickly and tighten too quickly with the three red line policy, for instance, as it relates to real estate, with the Common Prosperity Project, and with the regulatory crackdown, which largely seems to be a bit in the rearview mirror. Hopefully that's slowing down. But if they overdo it and they really impair some of their innovative leaders, like the Alibabas, like the Tencents, like the JDs that are really world forces at this point, if they slow them down too much, I think it's going to backfire, because you could see unemployment, you could see a lack of optimism for people to have their children have great jobs, high-paying professional jobs. So I think that's kind of a roadblock that they have to be wary of, and I think they will. They adjusted the monetary policy in July. I think they're going to do that again in the next month or two. That will be a positive thing to come out of some of these softer numbers. And as far as their long-term initiative of the structural change, moving from investment in non-productive assets into more productive, I think over the long term that will be a very positive thing moving forward.
Thomas, one final question before we let you go. I mean, this is an uneven recovery. So many countries still struggling with the pandemic, others doing better. Where does China stack up compared to some of these other countries, and how does all of that impact their economy when they have to rely on foreign trade to a certain extent?
Yeah, it's interesting. They had the fastest recovery. They had the zero COVID policy. They got ahead of it very quickly, and they did all of their stimulus in manufacturing, in infrastructure, in property in some regards, in construction, And while that may be good long term, in the short term, if you look at the developed world, the recovery has been more steady because the money went directly in the pockets of consumers. The US consumer is very strong. That's why you're seeing all that export volume and great export numbers from China, because the developed world is buying a lot of the products. So I think just moving forward to be focused on a balanced approach to add back some of that liquidity that they took away in the first 6 months. I do think Beijing tightened a little bit too quickly. We've talked about that in past sessions. If they reverse that in coming months, I think they're going to steadily have the growth, and they're going to have the reallocation into more productive assets while sustaining the growth in time for the 20th Annual Congress, when Xi Jinping is expected to take a third term. And these type of policy modifications and monetary easing in this slower growth will be a constructive thing for China, for the GDP, for employment, and for outlook from Wall Street moving forward.